this YouTube channel, which is called Business Farm Nutrition. Right, I'm here to introduce an introduction to Igcse, the introduction to accounting. So the first unit in accounting, which is the fundamental of accounting, So in this lesson, student, we are going to look at the difference between bookkeeping and accounting. We're going to look at the difference between bookkeeping and account. From there, we'll look at the purpose of measuring business profit and loss. From there, we'll dive into the law of accounting in providing information for monitoring progress and decision making. All right, students, let's start with the difference between bookkeeping and accounting. So the difference between bookkeeping and accounting is that bookkeeping has to do with the process of detailed recording of the financial transaction of a business. Okay, here's the thing, student, what you're thinking about bookkeeping. In each and every business, there are different types of transactions which transpires. So you need to keep track of all those transactions by recording them. So without recording all those transactions, you can omit them as you want to prepare the books of account. So it is very much important you keep track of all those transactions which transpire in your business. Okay, let's proceed. Since our bookkeeping is about just recording that transaction which has transpired in business, let's now look at what accounting is all about. Accounting is the language which is used in business. So we can say that accounting uses the bookkeeping records to prepare financial statements at a regular interval. Which financial statements? We are talking about the balance sheet or the statement of financial position and the income statement. Okay, these are the things which we are referring to when I talk about the financial statements. Okay, so we're going to define accounting as a process of, number one, collecting and recording financial data. Collecting and recording financial data. So now you need to collect that data after a transaction has taken place. You need to collect and record that data. After you've collected and recorded, you need to classify that financial data. Which group does it belong to? Does it belong to the asset? Is it a liability? Is it an expense, or is it an income? Let me break down by explaining these terms. Now, students, if you speak about assets, this is the property which belong to a business. It can be a software, it can be land. If you own a land as a business, it can be building, right? If you own different buildings as a business, all those are classified under to be the assets. These are properties which belong to the firm or a business. Right. Now, if you speak about the liabilities, this is the financial obligation which is supposed to be paid to others. Right? It can be individual, it can be other businesses, it can be other things. Right? Now, if you speak about the expenses, this is the money which we lose out in a business. All right, we spend money to insurance policies, right? We spend money to pay the rentals, right? Let's say, for instance, you're renting that shop. You're renting that shop. You need to pay rentals. Rentals will be classified under expenses. Then income. This is the money which we receive from other investments which we invested in as a business, or this is the money which we receive from the sales which we make as a firm. All right. We can also say that accounting has to do with the summarizing of financial data. How? Since you have classified that this data belongs to the assets, this data belongs to the liability. Now you need to summarize it. How are you going to summarize it? By preparing the statement of financial position. The statement of financial position has to do with the assets, the equity, as well as the liability. So this is a situation where a firm will weigh, right, whether you have more assets compared to the liabilities. Since you understand from the perspective that the liabilities is what we owe other people, right, must be not more than what you have as a firm. So if the liabilities are more than what you have as a firm, which means you're not doing fine as a firm, right? In terms of you may lose, you may start losing other properties, then your business will liquidate, right? So it is good as a firm if you have more assets compared to the liabilities. Now, what else do we prepare under this summary? We're talking about the income statement. The income statement has to do with to identify whether the business is making a profit or a loss, right? That's about the income statement. We can also say that accounting has to do with analysis of the financial data. All right, you have recorded this data, you have summarized this data, yes, in terms of the balance sheet or the statement of financial position, in terms of the income statement. Now, you need to analyze that data. You need to compare now from the current year to the previous years. How is the performance of the business? Have you made the more profit in the current period, or maybe you've lost some money, right, compared with the other previous years? You need to do the comparison, or maybe you need to find out whether the business is making a profit or is operating in a loss. You need to know how many assets you have compared to the liabilities. So now, if you make that analysis from that perspective, you need to interpret now, right? Whether the business has been doing fine, okay, if it has made excess profit, you allow now as the directors of the firm to venture, all right, or to invest that money in other projects, because you have analyzed that you're making profit. So you need to interpret, you need to make decisions, proper decisions, right? And that decisions should be be informed to other interested members, such as the shareholder. They must know, right, what you are doing as board of directors, whether you want to invest that money or you to pay out dividends to them, right? Now, after you have made that interpretation from the analyzed data, right, you communicate to the stakeholders, as I mentioned, the shareholders, your plans, your future plans, all right? You also need to whether you also need to publish, whether it's the public company, you need to sell more shares on the stock exchange, right? You know that when you sell more shares, you're going to have interested investors, because you know that you have a good background with the business, you're making profits. People are going to get more interested in investing in your firm. So these are the processes which we can define accounting students. Let's proceed. So this is how you can define accounting. So now, students, let's look at now the purpose of measuring business profit and loss. Number one, the purpose of measuring the profit and the loss is for the owner of the business to know whether the business is making a profit or a loss, right? That is the logical reason there, student. If you invest your money in a certain project or in a certain business, you need to keep record, you need to keep track on whatever is happening to that firm. Is it doing fine, right? Is it making a profit or loss? You need to be concerned, because that's your money which you have invested in that businesses. The other thing which you need to know about measuring the profit as well as the losses of the business is by need to know the financial position, right? How are you going to know the financial position? Is through the what we call the statement of financial position, where you weigh the assets compared to the liabilities. All right, student, we are doing fine at this moment. We are doing fine. Let's proceed. Let's proceed. Okay. The last thing in this lesson, we want to focus on the users of the accounting information. The users of the accounting information, which are the stakeholders. So now, who is the stakeholder? A stakeholder are the people or firms interested in activities of a businesses and are the potential users of the accounting information. That's what a stakeholder is. So now the first user of this accounting information are the owners themselves, right? They are interested in the accounting information because they want to know how the business is doing, because they have invested money, they have given all their money to that businesses. So they need to know how the business is doing. How are they going to find out from that information which is being prepared by the statement of financial position as well as the income statement? The other interested member or party in the accounting information are the bank manager. So the bank managers are interested in the present and past accounting records of the businesses to weigh or to find out whether you are trustworthy enough. Are you able to pay back that money? If you get a loan, for example, from the bank, are you able to get money are you able to pay back that money on time? Are you trustworthy with their money? They're going to know through passing through all the present as well as the past accounting information of your business. The other interested party, students, is the creditors, right? Most of the things which we buy, most of these things, we usually buy them on a credit. Okay, a credit is a situation whereby you get possession of the item, but you make the payment at a later date. That can be 1 week from now, or that can be a month from now. So that's what credit is all about. So before this credit is given, these creditors will want to find out your records of paying back the credit which you have. So they need to find out that information so that they trust you with their money, so that they trust you with their supplies, right? Credit is not only about giving you money, it's also about trusting you in supplying raw materials. Can you pay the money with the supply raw materials on credit, all right? And these people who do that are called creditors or trade payables. That's the new language which you need to know as the accounting students. All right, let's proceed. Let's proceed. The last party which is interested in knowing the accounting information is the government. All right, the government likes to know what profit a business has made in order to calculate the amount of tax that a business has to pay. It's simple as that. So the more profit you make, the more tax you're going to pay. So the last party interested in the accounting information is the government itself. You pay tax, and this tax is going to be used in different sectors of an economy. Right, that is the education sector, health, right? They're going to use that money in those different types of sectors. All right, students, thank you very much for